One of the most common questions Simon and I have been asked in the last 12 months is what should I be buying and where are the opportunities? But in today's video, we wanted to talk about 5 of the biggest opportunities in the next couple of years for smart investors with a long-term perspective.
The reality is the Australian property market has changed since COVID, and property values have gone up in so many different capital cities, in so many different regional markets. So gone are the days where you can just pick up any property in any location and end up winning. You really need to be super strategic and specific with the markets, the suburbs, the properties that you're purchasing.
So I believe the first and most incredible opportunity in the Australian market at the moment, and this isn't super sexy, is to go back to the fundamentals of what works. Now, Simon just mentioned that we sort of have this idea of 2 Australian markets right now. We've got the suburbs since the last GFC that have absolutely cranked. And then we've got these needle in a haystack suburbs that if you know how to find them, for example, there's about 50 of them in Brisbane, there's probably about 20 to 30 of them in Perth, and probably the same amount in Adelaide, which are the suburbs that haven't gone through the same rate of growth as others. And when you apply this first strategy, which is identifying those needle in a haystack suburbs and then applying long-term fundamentals. So thinking what worked for your grandparents and your great-grandparents is the same thing that's going to work for you and your children's children. And that is buying close to the city, buying close to the beach in Australia's capital city markets like Brisbane, like Perth, like Adelaide at the moment. I think Sydney and Melbourne have probably gone through such significant growth that we're not quite ready to be investing back there, but I do believe that both of those markets will have a great opportunity in the next 5 years again.
And to get a little bit more specific with those markets like Brisbane and Perth that do represent value, what we've seen in Brisbane and Perth is that in a ring, that 0 to 10 kilometre radius from the CBD is super overpriced right now, and you're not really finding any undervalued locations within that close proximity to the CBD. But as you start looking at this middle ring, the 10 to 30 kilometre range from the CBD, this is where we're seeing some super undervalued suburbs that have not seen the same level of growth, but will be the next domino to fall.
A big example of this is I just did some research where I did look at Sydney, Melbourne, Brisbane, Canberra, Hobart, Darwin, Perth, etc. All of the capital cities in Australia, I should have just said. And what I found is that there's suburbs, for example, like 10Ks in the city that have done 12 to +% per year over the last 10 years. And then there's suburbs within 2, 3, 4Ks of that have done 5% over the same time, or they've done 2% in some instances around Australia at the same time. So relatively speaking, some of these could be as much as 50 to 80% more undervalued than their neighbouring suburbs at the moment. And that is the sort of thing that if you know how to find, you can exponentially speed your process of moving towards financial freedom and choices in your life sooner. And what we're looking for is the same things we've always been looking for. So good quality, tenant ready, low maintenance properties on nice big blocks of land in quality streets, in quality suburbs, close to infrastructure, schools, hospitals, universities, in suburbs where the average person earns good money, in suburbs where there's low vacancy rates and not a whole lot of housing commission, like those fundamentals that you would be happy to go and buy and live in with your family and raise your children in the future based on the stage of life that the average income earner in that suburb's at.
Now, the second biggest opportunity in Australia at the moment is then looking into some regional markets, and there are thousands of regional markets around the country. You're going to hear a lot of people talking about these markets as time goes on and as these markets start to perform a little bit better, but we're going to give you a super hot tip today, and that is the Townsville market. It is basically the largest regional market that seems to be super undervalued right now, with a lot of positive things occurring up there right now. If you look at the population growth, the changes to the military up there, the changes to the mining sector, the railway, there's just limitless, beautiful things happening on paper up there that are adding huge amounts of economic benefit to the market. And when you compare Townsville to all other regional markets around the country, it does look statistically undervalued with a lot of short-term growth potential.
Simon and I were just reading an incredible article by one of Australia's leading analysts called Simon Presley. What was he saying about Townsville in terms of what it may be able to do over the next 3 or 4 years?
Well, he believes that it's going to be Australia's top performing market over the next 3 years. So he believes it will outperform Brisbane, Perth, Adelaide, Sydney, everywhere. And he wrote down every reason as to why this should actually happen as well.
I think the third biggest opportunity at the moment, and something that's just sort of popped out of the woodwork in the last couple of weeks, is the price of brand new property, which is finding a piece of infill land and building a house on it, is pretty much in Brisbane right now the same price as buying a 20 to 50-year-old home. Now, we've only seen this happen probably 2 or 3 times from our experience of buying over $500 million worth of property now up here and in Sydney. And when it overlaps, it doesn't last long. So this opportunity is going to be here sort of today and gone within a year. But what it could look like is going and buying, with the same fundamentals, a really good house close to the beach or piece of land, or within sort of 30, 40 k's from the city, worst case, hopefully closer, and building a beautiful 4-bedroom home, or maybe even building, if you're up for it, like a 3 or a 4-bedroom home with a 1 or a 2-bedroom granny flat. Not only there are you getting the price of new for old, which is fantastic and shouldn't happen, but you're also getting some phenomenal tax benefits when you get that tax report completed. You get above average rent returns because it's brand new, and generally you get higher quality tenants. So I'm not sure how long this one will last, but it's a phenomenal one that I've done multiple times myself with my wife Lisa. I like this strategy for people that can afford it.
And just to share a couple of examples of this right now in the current market, you know, down in South Brisbane, about 20, 25 kilometres from the CBD, I own a property in a suburb called Regent's Park. It's a old 3-bedroom, 1-bathroom brick and tile house on a nice piece of land. But the property itself is worth about $750, could get sold for $800,000. Wow. And just around the corner, about 5 k's away, there's this newer suburb that's popping up. And yes, it's got lots of properties coming to the market, but still you can buy a 500 square metre piece of land there for the low 400s, and then you can build a brand new 4-bedroom, 2-bathroom house for around $400,000 as well. So this is what we mean. There's such a small gap between these two opportunities at the moment. And to talk about another one, like a dual income property, like right now to buy a property with dual income potential, it's costing you about $700,000. And then it costs around $200 to $220 to build a brand new granny flat. So it's a $900 to $920,000 total project cost. Whereas what you can do in some suburbs is buy a piece of land, build a brand new dual income property on top of it, and you're in it for less than $900,000 as well. So that's what we're sort of referring to, where the gap between brand new and old is so narrow right now, but it won't last long.
The fourth low-hanging piece of fruit or opportunity in Australia right now is townhouses. So what happens as we come out of a GFC is generally houses in Sydney and Melbourne crank, then in the regional markets around it. When those guys get too expensive, people start looking at Brisbane, Adelaide and Perth, houses crank. And then what people do is they go back to the likes of Sydney and Melbourne, where the townhouses there, like our dad bought one in the 800s about 7 or 8 years ago, that would now be worth at least 1.5 mil plus. Townhouses get too expensive there. People come up to places like Brisbane or go to Perth, where townhouses are still dirt cheap. Now, if I look at a house in Brisbane right now, for example, in a suburb that's done well, then the house might have gone from 500K 10 years ago to $1 million now. And over that same period of time, the townhouse, which is a nice big 3-bedder with 2 bathrooms, might have gone from 400K and it's only sitting at 550 or 600K right now. So relative to houses, the houses have done 10% a year for 10 years, but the townhouses over the same time have only done 3 or 4% per year. So relatively speaking, if you are interested like me and Simon in buying metro markets, but you can't afford a home, then a townhouse in somewhere like Brisbane, where you can still get them for 500K in some suburbs, or on the beaches for under 700K, could be a really attractive option for those wanting to secure good stuff that they could not do in Sydney and Melbourne on the beach or close to the city right now.
And same thing goes for a lot of our clients right now. We might talk about buying a house in Brisbane that could cost you $650,000, but you might be 25 or 30 kilometres from the CBD. You know, some of them are preferring to go and spend that 550 or 600K on a townhouse to get closer to the city in a suburb that they're more familiar with as well. So, you know, you've got those options to save a little bit of money and get some better cash flow too. too.
Yeah, a good mate of mine from Sydney recently came up. He couldn't afford, he's a single dad with 3 kids. So like the banks didn't like that for him, renting a property down there in Wollongong. And so he came up with a budget. He had under 450K. We bought him a nice 3-bedroom townhouse that I think he paid less than 450K for at the time, in like a smaller complex in a good suburb with up and coming potential, and it's renting now for 570 bucks a week. So you know, those sorts of things are constantly changing in terms of the rent returns and the prices, but townhouses are very affordable and extremely undervalued right now in the right markets around Australia.
Now, the 5th opportunity is Old Faithful, the house and granny flat strategy that we just love so much. And in this environment where we've got higher interest rates, higher cost of living, higher property prices, then finding a strategy where you can target both capital growth and cash flow is just amazing. You know, the more that you can get from one thing, the better, right? So, you know, we really love to do these in Brisbane where there is a huge undersupply of properties available, especially for rent, and going out there and following those fundamentals, picking up a really great house in one of these super undervalued suburbs, and then going and building a granny flat in the backyard. You know, it helps so well. You get some great depreciation from building the granny flat. You lower your risk by having 2 incomes instead of 1. So if one tenant moves out, then you still have some money to pay for the mortgage. It also allows you to generate more cash flow. So you're not just having to fork out all of that negative gearing as well. And then you're still getting the capital growth because you're buying those fundamentals in the right market. Now, you can do this in some regional markets of Australia as well, like Townsville, but I absolutely love the house and granny flat strategy, and we're never going to stop talking about that one.
If you're thinking about buying an investment property in the next 3 to 6 months, then the team and I at Pumped On Property would love to offer you a one-on-one strategy session. To book the session, all you have to do is go to www.pumpedonproperty.com and click that free strategy session button. Now, in the session, we'll talk about exactly where you are right now, where you'd like to be longer term, and educate you deeply on the Australian property market. You can then take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each month. Either way, we look forward to continuing to help you build your property portfolio with confidence on your journey to financial freedom.